Your credit score is your financial footprint that lenders will see when you make an application for credit. The higher your credit score is, the more likely your application will be accepted and the better credit rates you will get. But what exactly makes up your credit score and how can you improve it? In this video, we're going to take a look at how credit scores actually work and what you can do to improve your score for free. Hello everybody and welcome to iQinvesting, where we talk about saving, investing and everything in between. If you want to see more personal finance related content every week, then make sure to subscribe to the channel and follow us on Instagram at iQinvesting UK. Now, let's first take a look at what a credit score actually is. Whenever you make an application for credit, the lender will likely make the decision based on your credit score. Your credit score, or credit file, is basically a report that is generated by a credit rating agency. There are three main CRAs that are used in the UK. These are Experian, Equifax and TransUnion. Some of these CRAs are used more by some companies than others. Experian is used by 76% of companies, Equifax is used by 54% and TransUnion is used by 30%. So, what exactly do I mean by making an application for credit? Well, the most common credit applications are mortgages, credit cards, loans, utility bills, mobile phone contracts, car insurance and even home insurance. All of these applications can include you asking the company to borrow money that you will pay back later. The company needs to determine how likely you are to actually pay back that money and not default on the payments. This is where the credit score comes in. When you make a credit application, the company will consult one of the credit rating agencies or even multiple and ask for your credit score. Your credit score will likely be different depending on which CRA is looked at. Experian uses a score from 0 to 999, Equifax uses a score from 0 to 700 and TransUnion uses a score from 0 to 710. This table shows a range of scores with each CRA that translates to fair, good or excellent credit ratings. Please note that anything below these values are considered poor, which means that you are unlikely to be accepted for credit. The higher your credit score is, the more likely you are to be accepted for the credit that you're applying for. Also, the higher your credit score, the lower the interest on the credit will be. Next, let's take a look at how these scores are actually calculated. To help determine how likely you are to make the repayments on the credit you're applying for, the credit rating agencies generate a score based on the following credit factors. Credit utilisation. This is a measure of how much you use the credit which you apply for. For example, let's say you apply for a credit card with a credit limit of £200. It is vital that you stay under that credit limit, because if you exceed it, you will be deemed as unreliable. It is recommended to stay well under your credit limit. Not exceeding 25% of your credit utilisation will ensure that you get the best scores in this credit factor. Or in other words, for a credit card with a limit of £200, try not to exceed £50 in payments. Missed payments. This is a record of how many credit repayments you have missed in the past. Every time you miss a repayment on any type of credit, it will stain your credit record. Missing too many payments will cause your score to plummet, so make sure to stay on top of them. For most forms of credit, you can do this by setting up a direct debit which will make the repayments in full every month. Hard credit checks. This is when a company makes a complete search of your credit report. This happens whenever you apply for new lines of credit. If you have too many hard credit searches in a short period of time, your credit score will drop. So, try not to make too many credit applications that say they are going to do a hard search on your credit score in a short period of time. If you want to find out what your own credit score is, make sure to do a soft check. This will not stain your credit score. You can do this for free on the credit rating agency websites. Length of credit history. This is the amount of time that your credit report has existed. The earlier you started your credit report, the better. A long, positive credit report will represent a borrower that is reliable. Settling debts. Paying off outstanding debts shows that you can repay money that you have previously borrowed. The more debt you carry, the less likely you are to be accepted for credit. If you have any debts that have been outstanding for long periods of time, consider paying them off as soon as possible. Now, before we look at how we can manipulate these credit factors to boost your credit score for free, let's first take a look at why having a good credit score matters. Let's say two people are applying for a £200,000 mortgage, which they will pay off over the next 25 years. Applicant 1 has a good credit score and gets a mortgage rate of 3.5%. Over the next 25 years, they would actually pay a total of £300,374 due to the interest. Next, applicant 2 has an excellent credit score and gets a mortgage rate of 3%. Over the next 25 years, they would pay £284,527 due to the lower interest rate. The mortgage rate was only 0.5% less, but resulted in a total saving of £15,847. The crazy thing is, you can actually get an excellent credit rating for free. All you need is enough time to actually build your credit score, which is normally at least 1 year. So, the earlier you start, the better. If you follow these next steps on how to improve your credit score, you could also make huge savings, like we just discussed. Using the credit factors that we discussed earlier, we can lay out a plan to improve your credit score for free. First of all, there are some tricks and habits that you need to get into to get you started on the right path. The first of these is to make sure that you're on the electoral roll. Yes, it sounds crazy, but making sure that you're registered to vote can boost your credit score. Clear all outstanding debt payments that you are behind on. This will show that you are capable of making future payments on time. Maintain a positive bank balance. Going into your overdraft can make you look financially unstable, so avoid it if possible. Don't apply for too much credit. As we discussed before, too many hard credit checks can harm your credit score, so try to look for soft checks only. Avoid payday loans. These types of loans can look like a last resort credit application, and they make you look less reliable, so avoid them at all costs. Avoid making cash withdrawals on a credit card. This can make it look like you have cash flow problems, which can reduce your score, so make sure to make cash withdrawals with your debit card only. Finally, make any credit payments on time in the full amount. You can do this by setting up a direct debit that automatically pays off the amount in full each month, just so you don't forget. If you follow all of these habits, your credit score will surely start to rise naturally. However, there is a sneaky method that you can do to boost your credit score free of charge. It sounds strange, but to boost your credit score, you actually need to carry credit to prove that you're a responsible lender. You can do this effectively by first applying for a credit card with a low credit limit. In the UK, I recommend that you apply for the Capital One Classic card. It's easy to get accepted even if you have a bad credit score. This card has a credit limit of £200, which is all you need for this trick. Each month, spend around £10 to £20 on anything. I recommend that you buy something that you would be buying anyway, such as your shopping or buying fuel for your car. This way, you're not actually losing out on any money. At the end of each month, pay off the amount that you spent in full. As no credit will be carried over into the next month, you will pay no interest on the money that you borrowed. I recommend that you set up a direct debit in which you pay off the full amount each month. You can do this on the Capital One app. Repeat this each month and your score will start to rise. But why is this? Well, let's break down the process of what's actually happening. First of all, by using the credit card, you are actually using a line of credit which boosts your credit score. Secondly, by spending no more than £20, you are keeping your credit utilisation rate under 10%. This makes you seem responsible. Finally, you are paying off the full amount each month, which shows that you can make the repayments. This easy trick makes you look like a responsible lender and it requires minimal effort. If you follow these tips, I guarantee that you will be able to boost your credit score and you'll be eligible for the best credit applications. If you found the video helpful, make sure to subscribe to the channel and follow us on Instagram at iQinvesting UK for more saving and investing related content. Smash a like button if you learned something new today and make sure to share it with a friend so that they can learn how to boost their credit score too. If you have any more questions about UK credit scores, let me know in the comments below. Thanks for watching.